Everybody, and welcome to this week's edition of The Chat. I'm Sue Stewart, along with Pat LaRose, and our great sponsor, Riverside, Chrysler, Dodge, Jeep, Ram on Vincent Massey Drive. They help us get this to you each and every week, just a little bit of conversation, and, well, we like to call it The Chat. Hi, Pat LaRose.
Hey, Sue. How are you?
I'm good. Thank you very much. We've got a special guest on the show today, and I'll let you do the introductions.
Yes, we're very happy we have Jenni MacDonald, a mortgage specialist with Dominion Lending Mortgages. If most people don't know, there were some major changes to the mortgage process, I guess. So we have Jenni on today to help explain that to us and maybe answer some questions. So thanks for joining us, Jenni.
Hi, thanks. Hi, Pat and Sue. Thank you so much for inviting me. I look forward to talking about these changes that we've had.
Quite honestly, Jenni, when me being a realtor, when I have people that come up to me wanting to know all the ins and outs of mortgages and what the rates are at and what's the new stress test like and yada, 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 I'm like, please speak to the specialist. I am not a mortgage specialist, and I can give advice. I can point them in the right direction, but we really appreciate your time today to try and get us up to speed with what's going on. Pat, I know you had a few questions about it specifically.
Yeah, before we get into that, Sue, I just wanted to jump in and talk a little bit about the real estate market, because I've had people asking me questions, and I often get asked questions because people see I'm in the media and they think that I have my finger on the pulse of everything. I wish I did, but you're seeing a lot of stuff on social media related to the real estate market. You're seeing houses not spending a lot of time on the market, going above asking price. I'm assuming this is because there's a lack of inventory right now. Maybe you can talk a little bit about the state of affairs and as far as Cornwall and the counties are concerned with the real estate market today.
Well, I'm sure Jenni will agree to this, is that looking at the numbers from last year, the year before to this year, you'd never know COVID was a thing. People are moving, they're having to downsize, they're relocating, first-time home buyers that are excited to have just gotten pre-approved for the first time. So people are still looking for homes, and the problem is there's just not enough on the market. So anything that's going, like, let's say I could give one example. There was a home recently that went on the market for $199,000. It had, I understand it had 16 offers, and it ended up going $35,000 over asking. It's really difficult. For the first-time home buyer, it's going to be tough, but with other people who are reselling, they're going to get a good number for their home, but they're also going to pay a good number for the house that they're buying too. So it has been difficult. I do have a client right now who's living with a friend because we sold her house, no problem, but she couldn't find the right one for her. So it's difficult, right, Jenni?
Yes, for sure. And it's happening often in Cornwall. It's been like that in Ottawa for quite a few years now, but for Cornwall, we didn't really have that before. But yeah, the inventory is so limited. So, and
that's the funny part. I've been in it, it's just over 6 years I've been in real estate now, and people want to know, okay, what's the average of this? And what's the trends that go on? There hasn't been a trend since I started. Every year is different from one to the next. And right now it's super crazy busy.
Yes. And you were talking about having to sell a home and find another one. When the banks are looking at doing the mortgage, they do need to have proof that you've sold your house and have a notice of fulfillment already in place in order to approve purchasing a new property. So those that are selling almost become at a disadvantage if they haven't already sold their home.
And Pat, I'll tell you, that's one of the most nerve-wracking things. It literally keeps me up at night feeling sick to my stomach, thinking it's all about timing right now. And as nervous as those buyers and sellers are, we are just as much on the other end of it as well. But Jenni, when it comes to appraisals right now, I hope I word this question properly. Like, I get worried sometimes when people are paying $30,000 over what the asking price was. Appraisers are going to come in and go, it's not worth that. Like, are we going to be noticing a big change when it comes to that?
Yes. So because Cornwall is such a small market, we often have appraisals asked for anyway because we don't have a lot of comparables. So for instance, if somebody has less than 20% down payment, and if it's an insured mortgage, either with CMHC, Genworth, or Canada Guarantee, if their desktop comes within range of what they're purchasing it for, then they won't ask for an appraisal. But if it is outside of that range, which right now it seems to be pushing the edges, then a CMHC will order an appraisal. If it comes under value, then yes, the lender or the borrower is responsible for that difference in price. So it does become quite scary. And that's why having somebody waive their conditions before we've had an appraisal in and show us what the value is, it is getting a little scary. But keep in mind too, all the comparables are going up too. So even though it's 30,000 over asking, doesn't necessarily mean that the comparables aren't going to be there to support that value. And I think too, sometimes real estate agents, like, it is a strategy to price it a little bit low so that they do get multiple offers that pushes the purchase price for their sellers to get.
Absolutely. Yeah, for sure.
And Sue, for you in the real estate industry, that must be frustrating for clients that you're working with who are looking for homes because they find a nice home, they want to put an offer on it, and then you find out that there's 10 other offers and it's going above asking, and then you're constantly going through this negotiation and it's pushing people's limits, on what they're approved for. So that's got to be tough.
Well, I think the hard part is when you have a client that they have a certain budget they want to stay in, and then you find out there's 16 other offers in there. Unless you're going with asking or above, it's kind of difficult to try, and there's no lowballing anymore right now. Absolutely zero lowballing.
Right.
So that's the difficult part.
So as far as mortgage is concerned, July 1st, there were some changes that took place. Jenny, can you give us a little bit of insight as to what's happening and what people can expect?
Yeah, so it was CMHC it's for insured mortgages. So if you have less than 20% down payment on a purchase, so it's very specific who it affected, then they announced 3 major changes. 2 of them are quite significant for a lot of our first-time buyers, especially. It used to be as long as your credit score was over 600, you would be considered for a mortgage. They've actually raised that all the way up to 680, which is a really significant change. So your credit score is 100%, that's your power. And the second change that they made was the amount of debt ratio they let you have. So until this change was announced, the GDS, which is your debt ratio of your income compared to just that house, it used to be 39. They've lowered that to 35%. The total debt ratio, which means that house, all of your debts compared to your income, it was at 44. They've lowered that to 42. So in terms of what that means for Cornwall, on a purchase, if somebody's got $50,000 as an average household income, which is right around the average in Cornwall, then it used to be you could probably qualify for a purchase price of around $220,000. Now you're limited down to about $190,000. So it lowered your buying power by about $30,000, which is pretty significant in Cornwall because our prices aren't huge. The third change that they announced was they would no longer allow borrowed down payments. So we have a few lenders that would allow you to get, let's say, a line of credit at your bank. And as long as your income could support the payments on that line of credit, you could actually use that as your down payment. That particular change doesn't affect too many people. Not many people used it to begin with because not many people could afford the mortgage and the payments on the line of credit. So that particular change isn't going to affect too many people. Keep in mind, though, that was only CMHC that announced that. Genworth and Canada Guarantee, who offer the same product, they are not changing their rules. So basically, pretty much every lender out there uses all 3 insurers. So if a client would no longer get accepted by CMHC, they still may be accepted by Genworth or Canada Guarantee. So there's still options out there for lenders.
Can you explain to us a little bit? I hear quite often people are getting gifted their down payment. Can you explain how that can work legitimately with some that are looking?
Yeah, and that is still available to clients. So with a gifted down payment, it has to be a gift from an immediate family member. It can't be a gift from a friend. And what we supply before we waive our conditions, we supply a gift letter. And every bank has their own version of it. So the gift letter is signed by the donor and by the borrower, and at least 15 days before closing day, the exact amount of the gift, we have to show a bank statement showing that exact amount in a deposit, and that qualifies as a gifted down payment. And it is a valid form of down payment that all three insurers accept.
Typically, I know you were saying that if you're giving a down payment that's under 20%, what is the average down payment for most right now? Like that's tough to save up and afford, especially with rents being as high as they are right now in the city of Cornwall. Like we've never seen rent this high. So I'm just wondering how people are going about affording their rent plus saving up for a down payment to get to almost 20%.
So usually I've found in Cornwall, whether you're a first-time home buyer or not, 5% down payment is what most people are going to use because they can. So even if I have clients that have more than 20% down payment, they'll choose to just put 5% down. They'll take any of that other equity and pay off any higher interest debt. Because a lot of people are carrying 20%, 22% on a credit card, and you only pay, right now we're at 2.24 on a 5-year fixed. I've actually got one lender, it's even lower now. So you, rather than put their money against their house and pay 2.24 on a mortgage, they're saying, okay, I'm just going to take that money and put it against car loan or put it against my credit card where I'm paying a much higher interest rate. I mean, really, your mortgage is your cheapest debt you're ever going to have. So I always recommend people.
OSAP, outside of OSAP, which I think I just got done paying, and I'm 45 years old.
I think OSAP, the interest rate's pretty cheap on student loans, though.
Yeah, yeah, yeah. It's not quite there. I think we're working on my son's right now, so I've even given up. Don't even tell me. I don't even want to know. Just let me know how much I owe each month. That's it.
Yeah. And lenders actually consider student debt good debt. Because it was actually towards something as opposed to buying a TV or going on a trip. So, you know, there is good debt and bad debt that in terms of what lenders look at.
Mm-hmm. And Jenny, there is, so just so our listeners are aware, there is a difference between a mortgage specialist and somebody at a bank helping you with a mortgage, right? And I'm bringing that up because do banks specifically use CMHC, or do they have the same ability to use a different insurer?
Right. So when you're going into your bank, they do have access, depending on which bank they work at, they do have access to all three of the insurers. Not all of the banks are using Canada Guarantee. They're a fairly new one. CMHC is the only one that's government owned. Genworth and Canada Guarantee are privately owned. So they have their own set of rules, and their statistics, they base all of their changes and their rules on the statistics of default. And default in Canada is rare. If you look at the number of mortgages in Canada, there are very, very few that actually go into default and people losing their homes. So what was the question?
Well, yeah, you answered it. Yeah. But, and you know what, maybe this is a good opportunity for you, maybe just for people who are unsure, because I just had this discussion with somebody the other day who was talking about getting a mortgage, and they had some concerns, and I suggested that they see a mortgage specialist. So maybe can you explain a little bit of what the difference is, you know, for somebody who's going to you per se versus going to a bank for a mortgage?
Yeah, so it's a terminology thing as well. On the broker side of mortgages, there's mortgage agents and mortgage brokers. So a broker has to, it's just same as with real estate, with a broker and a realtor. It's just another set of courses you take after you have a certain number of years experience. Then you have to have hit a certain number of deals in order to qualify to take your broker license. And you had to have been an agent for at least 2 years. And once you have that broker license, then you can be called a mortgage broker. So that's why sometimes you'll see somebody called a mortgage agent versus a mortgage broker. Whereas at a bank, you may have like a mortgage specialist. It's different terminology. So with a mortgage specialist, they don't do the same courses that a mortgage broker would. And anybody at a particular bank, they're limited to whatever that bank products are available. So, and I do, brokers and agents do work with bank as well. So TD Bank, Scotiabank, they are also banks that a broker or an agent's going to work with. So it's just different courses. I guess the difference would be, even within a bank, you're going to have the bank specialists who all they're doing is mortgages at that particular branch. But then you'll also have people at the branch that do mortgages and everything else. So I would say if you have a particular situation that's maybe a little more complicated, or you've been turned down somewhere else, then going to a mortgage specialist at a bank or a broker or agent on the broker channel is probably your best option. I think the biggest misconception is people think that a mortgage broker or a mortgage agent can't offer what the banks offer, that somehow it's going to be a higher rate and it's going to be a fee involved. That only happens in very specific situations. That's going to happen in a situation where you cannot get approved at a bank. Then, and you're told up front if there's going to be a cost. So in terms of going to your branch, if it's a situation that you're a little bit not sure if you're going to qualify, I would say ask to see a specialist as opposed to somebody that's doing GICs and loans and lines of credit, and someone whose knowledge base has had to be spread out, as opposed to somebody that understands our rules. Because the last 7 years, I think we've had 17 major rule changes. So, and I mean, I've even had someone that works for a bank come to me and say to me, well, I thought I had to have 20% down. And it was somebody that worked at a bank. So because they weren't a mortgage specialist, they don't know, because there's so much going on. You know, I couldn't tell you the best GIC to buy. You know, like that's not part of my training. So just to clarify, so you're a mortgage broker, because I was calling you a mortgage specialist. I'm a mortgage broker.
Right, you're a mortgage broker,
yeah.
Right.
Yeah, and different provinces have different labels as well. So for the most part, a mortgage broker can also do mortgages right across Canada. So, which is another situation that I find several people in Cornwall run into, is they've gone online and found a mortgage broker who's situated in Toronto. And I will guarantee you, if they aren't taking you to a bank, if it's a private mortgage, if it's a B-side mortgage, B-side being you couldn't qualify at a bank, I'll guarantee the fees that you get charged by a Toronto broker are going to be significantly higher than what a private lender in Cornwall will charge you. Because you're paying Toronto prices.
Right.
Nobody wants to pay Toronto prices.
No. And honestly, I'm talking about huge money. I had one client that came to me and she'd been approved by a Toronto broker. Her fees were going to be $16,000 on a $200,000 mortgage.
Wow.
My private lender charged $2,000.
I have a question. I have a question that it comes up quite often, and I'd prefer you to answer it. Again, I know my capabilities and my credentials. I will always pass it over to someone like you who's the expert on it. But I've had many people, especially young people, first-time home buyers, they're shopping around. They're going to apply for mortgages at different places to see who comes up with the best one. What would your advice be on something like that?
Oh, that's a tough one. Because it's not necessarily at a branch where you're going to get your best rate. So you can go to all the types of lenders that have bricks and mortar. And a lot of times, Sue, it's a personality issue too. Not an issue, a personality choice. If have a personality where you like to sit face to face and have a branch where it's your home branch, then yes, going to a bank makes sense. If you don't care and you're very comfortable with online options and you will make a phone call or send an email to a lender and you're happy with that, then a lot of times we call them monolines. So they're banks, like Tangerine, kind of a bank, where there's no bricks and mortar. It's all online. Oftentimes we can get you better rates there because they don't have the overhead that a branch is going to have. So I would say for somebody like that, you aren't necessarily going to find the best rate by doing that. Now, it's not a concern for credit scores, like you'll hear people say, oh, you're going to pull my credit again. If you are going to somebody whose license is specific to getting a mortgage, there's a 45-day window. So if, let's say you went to me and another mortgage agent and then a mortgage specialist at a bank, and we all pulled your credit bureau, because it's within a 45-day window, it doesn't affect your score. So it's not like a hit. Now, that being said, if you go to somebody at a branch and their license is to do other things as well, then it may count as a hit, depending on how they send in the request.
Okay.
So,
and
I would say those, because sometimes I'll have people that they do that rate shopping, and I would say always call a mortgage broker or a mortgage agent and just say, what is your best rate that's out there? Because oftentimes I'll have clients that are rate shopping. It's not worth my time to run through the entire process and then find out that their bank's going to match me anyway. Because people have this weird loyalty to their bank. I don't understand it, but they feel like their bank is going to treat them better because they've been there longer, which isn't always necessarily the case. So if a client calls me and does say, I'm just looking for the best rate, what is your best rate out there? I typically will just say to them, tell them your mortgage broker, Jenni MacDonald, can get you at 2.19 on a 5-year fixed. And if they go back to their bank with that, oftentimes their bank will say, we will meet that. So
now, when it comes to someone like you, Jenni, you don't have the brick and mortar. You have a telephone and your office is anywhere you are at that moment. You're almost like a real estate agent. You're working pretty much 24/7.
Right. So I do actually have an office in Ottawa and in Cornwall. So now because of COVID, we have not been meeting anybody in person. But yes, I do have a bricks and mortar if somebody is more comfortable doing that. Not right now, but when COVID's not on. But yes, my phone is my office. Doesn't matter where I am, morning, noon, night, weekends, that is, we're always available. And I actually now have a partner. His name's Will Douglas, and he is available if I'm not available. So we do often work on files together so that the client is never left worrying about their deadlines.
I do apologize. I know you have offices, but since March, I don't know if anybody's in them.
Yes.
I mean, I haven't been to Remax in months. I don't even know what it looks like in there anymore.
Right. Yeah.
But yes, it's true. You're on the road, you're working, and I hear very satisfied clients of yours all the time that it's like, yeah, she was on it. Boom, I got my answer. I was like, right on. I love hearing that.
Yes. So I'm going to put a little caveat in there because right now the lenders are so overwhelmed. We got a message from one of our lenders the other day saying, don't even expect us to look at your file for 12 days, whether it's a purchase or not. We have another lender right now that's so overwhelmed. They're actually basing their document review on closing date, not on the condition of financing date.
Wow.
Good to know.
How does that work, right?
Eerily.
Yeah. So I would recommend, if that's the lender that I was going to be sending to, and the real estate agent, oftentimes the real estate agent does consult with me. I get permission from the client to share information. And sometimes if I know that that particular client was pre-approved with that particular lender, I will say to the real estate agent, make your closing date as early as you possibly can, just so that we can get approved. And then we'll do a date amendment after. So it's one of the ways we get around that.
So how long does a pre-approval last? Like if somebody gets pre-approved today, how long is that pre-approval good for?
Most lenders, it's 4 months, 120 days.
Okay.
That's very typical. We have a couple lenders that are 90 days. But a pre-approval, again, doesn't mean a whole lot. In a lot of cases, it's a rate hold, especially if you go into your bank. If your bank hasn't asked you for copies of your documents, all you have is a rate hold, because they're taking your word for the information you've given them. Most times, if you're going to go to a mortgage broker or a mortgage agent or a mortgage specialist, and some banks will collect all your documents up front, so your pre-approved is based on your actual documentation. Other than the verbal call to your workplace, that step normally is not done until you accept offer.
Well, Jenny, we're almost going to be out of time soon enough, but if you could give us a quick summary again, as Pat mentioned, there have been some big mortgage changes right now, but you're saying it's most specifically to CMHC?
Yes, that's the only one that made the big July 1st change.
Yeah, and can you give us again just a brief summary, maybe some advice to whether it be first-time home buyers or somebody considering selling their house if they've got their eye on the house that they want?
Right.
Yeah.
So I would say number one, make sure your credit score is the strongest it can be. And if you're not sure how to do that, you can go on to creditkarma.ca, and it actually gives you the steps on how to build your score as well as giving you a daily score. Just be aware that Credit Karma's score is called a TransUnion, and it's not the kind that a bank looks at. A bank's going to pull an Equifax, and even if you pull your own Equifax score, it's called a consumer score, which means it's based on 6 months of history, whereas the bank scores that we pull are based on 6 years of history. So your score may not be as accurate, the one that you're looking at, as what the bank is going to see. So number one, if you're thinking at all of a purchase or a refinance or getting any kind of financing at all, make sure your credit score is as strong as it possibly can be. So in that case, Sue, I would say check it out sooner than later. Have a mortgage agent, mortgage broker, mortgage specialist, somebody pull your credit score so you can see if there's any little blips or bruises that we need to take care of ahead of time. So secondly, that down payment is massive. If you are on a COVID layoff, don't even look for a mortgage right now. If you've deferred your mortgage payments, if you've deferred any of your credit card payments, right now lenders are looking at that as a negative, because if you can't pay your mortgage now, why do you think you're going to be able to pay a mortgage in the future?
It's the ultimate stress test right now for everybody.
It really is. Yeah, and it does show on your credit bureau that you've deferred the payments. So even though it's not affect score, it will affect your ability to be approved for a mortgage.
All right, Pat, anything more?
No, I mean, if people have questions, they can go to your website. It's jmacdonald.com or .ca?
.ca.
jmacdonald.ca, and they can find you on Facebook as well, right? Jenni MacDonald,
Yeah.
Dominion Lending.
Yeah,
and then
Google.
they can connect it. Or
Yeah,
Google.
or Google Mortgage Broker Cornwall.
Yeah.
You'll find me there.
There you go. And Jenny can help answer any questions that you may have specific to your own situation. And Sue, the real estate market is still, like we said, it's hot right now because of the short listing. So hopefully, I don't know, do you think we'll see any changes coming to that in the next few months?
Are you asking me or Jenny? Because I have no idea.
Who knows, right? We're in a time of uncertainty right now where nobody can really answer how things are going to progress. But I mean, hopefully. I
think land's going to get cheaper in Florida. If that's anything.
And if you want a mortgage in your house here, so you can buy it in cash in Florida, we can do that.
There you go.
Thank you so much. We really appreciate your insight and appreciate your expertise on the subject.
Okay. Thanks, guys. Thanks for the invite. I appreciate it.
And that's this weekend's edition of The Chat. Or is it the weekend? I don't even know it. It doesn't matter.
It's Friday. It's Friday. Yeah. So that's, thanks, Jenny, for joining us. Thanks again to our sponsor, Riverside Chrysler Dodge Jeep Ram. If you're in the market for a car, you can shop their inventory online at riversidechrysler.ca, and you can also connect with them on social media, Facebook and Instagram, Riverside Chrysler Dodge Jeep Ram.